The major markets ended mixed for the week, as earnings season is in full swing. The domestic market closed mostly higher, as the S&P 500 set a new all-time closing high, and is expected to set a new all-time intraday high this week. Meanwhile, the Dow Jones average closed lower as disappointing earnings results from a handful of companies pulled the more concentrated index lower for the week. This week holds the largest number of earnings reports for this season, and next week will be close behind in number, with just over 1,000 reports to be released. Market participants will continue to digest this information in the midst of a two-day Fed meeting that starts on Tuesday, followed by a Wednesday press conference. However, no change is expected to be made to the Fed funds rate this week. On the housing front, last week's release of the March existing home sales missed expectations, while new home sales exceeded expectations, and the weekly MBA mortgage applications fell another 7.3% to reflect the third consecutive weekly loss. Finally, Friday's release of first quarter GDP estimates showed a quarterly increase of 3.2%, surpassing the expectations of 2.3%. This reading is especially surprising, as many analysts, and even the Atlanta Fed, had greatly reduced expectations as recently as last week. Moreover, the CBO reported back in January that the government shutdown wiped away $11 billion of economic activity, with most of that taking place within the first quarter of this year.